I had a very successful event in Singapore. I was there for 10 days. A lot of you showed your affection on me wherever I went, whether it was the streets of Singapore, whether it was at the restaurants, the malls, and more particularly at the events. I wish to thank all of you from the bottom of my heart. My team felt that I had never done a full fledged event in Abu Dhabi, and they wanted me to do so because we have a lot of friends there. So the next event would be in Abu Dhabi on the 5th of October. Those desirous of participating in that event, drop a message at the WhatsApp number given below or send a mail at the email given. My team will get in touch with you.
Hi everyone, welcome back to Be Rich. I hope you had a wonderful weekend and you're back at work. Well, today as I'm recording, the market doesn't seem to be doing anything much. Yes, it is positive, but positive days are not great days for me personally because there's nothing much to look at. Of course, one of my favorites is doing well and I'm looking at it, and I've been talking about it on Instagram, and I hope you guys are also looking at it. And I'm sure a lot of you have a lot of questions about it, and I'll be happy to answer questions about that specific bit of news and the market bit if you reach out to me on Instagram, where I'm talking to more people over there about specific news items regarding what's there in our list of considerations. But today I wanted to talk about Ashwath Damodaram. He's got a new book out. It's about corporate life cycles. And I'm sure Rupesh would put up the graph somewhere on my side, right or left, where we're talking about this corporate life cycles. And why is this important and interesting? First of all, if you have not read his book about valuations, I strongly recommend that you read his book of valuations. A lot of you have been reaching out to me and Anand and Shashwat and a lot of other people in my group asking about how to do intrinsic value, how do we calculate this. And this guy is a very smart guy, Mr. Damodaran, and recommend that you read his books. And valuation, little book of valuations, a small book, not very large. It's an easy read, and it dives into how to calculate and do number crunching in terms of valuation for companies. Of course, most of the examples there in that book are American companies, but you can use the same principles for Indian companies and figure out how to do valuations. And especially if you're looking at doing intrinsic valuation and you're trying to calculate all these discounted cash flow method and how to do it. All the equations are there in that book and you can figure it out. I have read that book and it is a very, very useful book for beginners, and I recommend that you read that book. But then again, the caveat is if you're into that kind of number crunching and calculation, you do not need to do number crunching and calculation. It's not the only way to evaluate a company and see if there is intrinsic value in it. There are other ways to do it, which I've spoken a lot about, and Anand has spoken, and Shashwat has also spoken about it. And one of the basic ways to start is, of course, with the price to earnings and price to book for banks and non-financial companies is another way to look at it. And I've been doing series of videos on that too. So don't get daunted about thinking that you need to know a lot of mathematics or be able to do calculations or understand spreadsheets to do it. You don't have to. You can find great companies to invest without knowing much about that. Coming back to his new book, which is called Corporate Life Cycle, I recommend that you read that book too. I'm currently reading that book. It's a nice book. Once I finish that book, I will definitely review that book and tell you a lot more about what I found in that book, and I'll discuss chapter-wise in depth in that. But this is pertaining to a news item which came about him, and in his book it is a Mint article where they had interviewed him about this, and I'm sure Rupesh would share the link to the articles down below. And those of you who have the time, have the interest, can definitely read further about this and read what is there in the article. I just wanted to give you the gist of that as a value investor, how you can read about this. He talks about comparing companies to human beings. So in human beings, we have, birth, then we have our childhood, then we have adolescence, then we have adulthood, then we have old age. So taking that adage, human life cycle, he talks about companies going through this life cycle. So there are Indian examples for each stage. So then you have the startup stage, right? Then you have the young growth stage. Then you have the high growth stage and mature growth stage and the mature stable, and finally the decline. And each one, he talks about revenues going up and stabilizing. Then he talks about earnings going up and dropping. And he talks about each one in depth. And the startup stage is to have an idea or a business. that meets an unmet need in the market. I've spoken about this too, that if you want to start a business, it should be an idea, something which is offering a solution to a problem which is already existing in society. So if you are offering a solution, or your idea or a service is targeting a certain problem in society, you're much better off because there's already a market for that and you're addressing that market. And that way, your idea can catch on faster than trying to do something that's already existing and trying to do it better. So in that, he talks about coin switch and Kruthium and the product testing which is going on. It's a light bulb, the initial idea which is coming on. The next stage is the young growth stage, where the business model is being created and it converts the idea into a revenue stream and money starts coming. And in that, he talks about Aether and Zepto, which are business model idea has come into actually into a business and revenue is starting to generate from this idea. The next stage is the high growth stage, where business is building, looking for scaling and benefits and moving to profitability. And there he talks about Zomato and Geo Infocom, where scaling up is done past testing. That means ideas proved, revenue is able to generate, and from your just testing idea, you move on to generating and scaling up, meaning building a business up. Then we come into the mature stage, which is the so-called midlife crisis, he says. Companies like Titan and Infosys is what he puts into this bracket. This is the mature growth stage, is business with revenue and growth and try to increase your margin. So this stage is a tricky stage for businesses because you've established yourself, you've grown into market and you've grown in capacity, and now you have to look at stabilizing and staying and growing and increasing your revenues and make sure that you don't start declining. And the reason why I'm saying that is because the next one is called the mature stable stage, where he's put Grasim and Hindalco. He calls it the end game because you don't want to become from the midlife crisis, from the mature growth into stable stage, because once you're stable, you start defending against competitors and you're finding it hard to find new markets. And you know what's happening in Hindalco and Grasim too. Yes, they're great companies, but at the same time, revenue and growing into newer market gets harder and harder. And the last one is called the decline, where sales are down and your business, as your market is shrinking. You put SpiceJet and Z there, and we know what is happening in SpiceJet and we know what's happening in Z. So as an investor, what is all this? Well, as an investor, I would say we want to be in companies which are in the high growth and mature stage in valuation. Because if you're looking at high growth and mature growth, these companies going from high growth to mature are the ones where we as value investors will see the maximum benefit for us in the capital we are investing. In the young growth stage is where it's far more risky, and the startup is where venture capitalists are sitting. Because if you see startup venture capitalists sit, they make a bet on companies of 10 companies. If one reaches a mature growth stage, then they see success. They see huge multiples of revenue. But most venture capitalists, as soon as they reach the high growth stage, is when they exit the business. That means they go to IPO, and as soon as IPO is done, they exit. But that's where the most companies fail, because most companies do not come from startup and they do not reach high growth at all. They kind of fizzle out during the young growth stage itself. When they're trying to test the idea and see if there's a market for it and trying to convert them into revenue streams, that's when they usually run out of funding, or their business idea gets diminished due to other people in the market catching on to their idea and starting to produce their idea at a lower cost. This happens to every single company, and we've seen this happen in the past. It can happen to big companies too. So as a value investor, I would look at companies which are in high growth and which are going to become mature growth, because during that process of transition from high growth to mature, that is the most stable part, and where you have high chances of really becoming multi-baggers. I would not touch companies which are mature and stable, because when you become mature and stable, going back to mature and growth and maintaining stable is very difficult. You can't go back, nor going forward is only the decline stage. Of course, decline companies are companies which are not in a great position and not a value prospect as a value investor. Of course, I've taken a great concept and a great book, and I've condensed the article into a 10-minute analysis for you. So I've chopped and I've missed out a lot of chunks in this. So if you do like reading books, I highly recommend that you buy his book. First, Valuations, Little Book of Valuations. Then, of course, his Corporate Life Cycle, because as investors, it's great to know this information. And if you don't have time to do that, at least click on the article below and read the Mint article, and do Google and read some of his other papers and find out. If you do have time, at least see his YouTube videos. Some of them are very long, his lectures, which he's not recorded them. He's given these lectures in meetings and his class lectures. He's a professor. So some other people have recorded and put it up on YouTube. Some of them are very long and they're very interesting. I would strongly recommend that you watch them if you have the time and the inclination to do this. So yes, this is what I wanted to share with you today. Some kind of an information on how to grow and expand your skill set so that you move beyond being someone who's looking to see who's going to offer you the next news to someone who can create your own wealth and your own patas list, as we say. Thanks for watching the video today, guys. Do share this with your friends and family, whomsoever you may think they would like this kind of content. And do put your comments down below. Me and my team do read your comments, and we do try and bring those ideas into the videos. Again, thanks for watching the video today, and I'll see you in the next one soon. Bye.
Hey guys, welcome back to Be Rich. Before we get into the video, I wanted to bring to your notice that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.